Well, welcome back everyone to the day after the massive plunge we saw yesterday. The entire crypto market down about 10%, and some cryptos saw upwards 30% or more plunge during the day. Although today we're seeing a little bit of a recovery, I want to share with you my thoughts on the entirety of that situation, why it all went down. Then I want to share a little bit of a beef that Coinbase is having with the SEC. This could be a big deal, and I think you want to see it. And then we want to take a look at the charts. I want to share some information with you, some things I told elite members yesterday that I want to share with members of the entire channel today. That'll be towards the end of the video. So let's go ahead and get into it. First, let's go ahead and address what happened yesterday, because many people today are still trying to wrap their minds around what in the world that was and how to even define it. Was it a flash crash? Is it just a market correction? Is it a crash that's going to lead to a greater crash? After gathering some data on what was going on, I think it was a combination of many things and possibly some nefarious activity as well. As this all went down, there was some reputable institutions that were in fact liquefying holdings in cryptocurrency, primarily the big ones, Bitcoin, Ethereum, because that's where many of the clients hold their money. As this occurred, it ended up being that many financial institutions ended up liquefying at the same exact time that cryptocurrency was being adopted in El Salvador, the day of. This, of course, is very strange, and I highly doubt that it's a coincidence, because rarely when things like this happen are they actually coincidences. These individuals know exactly what was happening yesterday. And when crypto rolled out, at least Bitcoin did in El Salvador, it was met with some opposition, but that's okay. That opposition is not going to lead to the types of drops that we saw yesterday. But the liquefaction and the concurrent sell-off that occurred afterwards, in fact, did. Once these financial institutions sold off, taking some profits and liquefying, of course, then individuals decided to sell off too because of the fear, uncertainty, and doubt. When people see a sell-off, they panic and they sell, or at least they take their coins out and put it into a stable coin to ride out what in the world is going on, to put their money back into the coin that they would like. However, many of the applications that allow this to happen using cryptocurrency were also down at the same time that we were hitting the bottom of that drop, which furthered the problems that we saw. So yesterday, it seems like it had nothing to really do with any bad news that was out there, and it doesn't necessarily look like a market correction as well. We're going to move on to this news here too, but with all of that said, it makes me think that if we're going to see any more furthering drop later on the week, it shouldn't be too severe. It could be some percentages off of what we're seeing right now, but hopefully what many people are thinking is that we're going to see some stabilizing off and then a recovery. Possibly what's happening today is a part of that. There is a slight recovery going on, but this is the Coinbase news. Coinbase CEO calls out the SEC for sketchy behavior. So I'm going to take a look at the story for you. I'm just going to kind of recap it for you. I'll leave the link to this in the description below if you want to read it. This is from CoinCora, but essentially what's going on here is the Coinbase CEO wants to open up a new service to those users of Coinbase. Essentially, that service is going to revolve around the users of Coinbase being able to lend their assets to Coinbase in order to receive some sort of a yield from that lending. This is a very common thing that many financial institutions and banks do. In fact, many of you may be involved in this already. When you take your money, you put it into a savings account. Essentially, you're saying, hey, listen, I'm lending you these assets of mine. They're mine. I could take them out whenever I want, use them whenever I want. I'm putting them in the savings account. And by doing that, you're allowing that institution to use that money, which they will invest or lend out to individuals for some sort of a percentage fee back. And then, of course, if you ever want your money, you take it out. Well, Coinbase wants to operate in the same way. However, when they let the SEC know that they wanted to do this, and the SEC's response came back, and you can see it right here in the article, they said they're labeling that service a security. So what? It's a security? That seems weird. So if you do a quick Google search on security, just to give you some examples, you can see them there. Encipherment would be security, digital signature, access control, data integrity, authentication exchange, traffic peddling, routing control, notarization, and others. This, of course, is from Wikipedia, but you get the point of what securities actually are. So in this situation, it's very strange that the SEC is labeling a service of lending money and giving individuals an interest or yield on that money so that the financial institution, in this case, Coinbase, the holder of that money, can use it for whatever means they have to see fit to use it for. that is being labeled a security. And you can see here, Brian Armstrong said this: if we end up in court, we may finally get the regulatory clarity that the SEC refuses to provide. But regulation by litigation should be the last resort for the SEC, not the first. And the interesting thing I see is that he wants the clarity that the SEC is refusing to provide, which is exactly what I want to see too. I want to understand why they're calling this service a security when they don't call this service, if banks do it or other financial institutions, they don't call it a security for them, and it really makes no sense. So clarity has to be given in this situation. Now, as we said, overall, in the last 24 hours, the market is seeing a little bit of a recovery, at least the crypto market. You can see here on Coinbase, it is up 1.76%. And if one of the cryptocurrencies isn't up, it's at least stabilizing off to a degree. And you can see them here: Bitcoin, Ethereum. Ethereum's been doing pretty decent today, although as of the recording of this video, it's about 4:30 on Wednesday. It's dipped down just slightly. Cardano sort of steadying off. Binance Coin, you can see same thing. Solana is doing pretty good. It's pulled up pretty significantly. It has now come back just a few percentage points in the last half hour. And many of them are just sort of stabilizing, with some doing very well, including Terra doing well, and Dogecoin stabling off also. So when we look at the Dogecoin chart right now, it's down about 0.7. Putting the news together of what happened yesterday and what we're expecting for the future of cryptocurrency, this is where we need to begin to decide how we're going to react to this. One of the things that I did yesterday is I took the opportunity of the down market to go ahead and invest a little bit more into some new cryptocurrencies. I decided to transfer some funds into Coinbase and finally buy some Solana and Cardano. I have been hesitant to buy them up until now, but they seem like they've been performing well, and they seem like they have a solid backing behind them and solid technology and development teams behind them too. I am not the YouTuber that's going to be out here promoting to you some of the new coins or some of the crazy coins or anything like that, but I like solid coins that have backing to them. And so I put some money into those coins. I suggest that you look into it as well. You, of course, need to have an application that will accept that. Robinhood will not. Coinbase will. In addition, we need to take a look at what's going to happen in the future in connection with what happened yesterday and cryptocurrencies to decide how we're going to react to it. Of highest importance is the fact that on September 14th, we're going to get the Consumer Index report, in which the United States is going to reveal what the prices of goods have been as far as the purchasing power of the US dollar. We know that many financial institutions do like to take a look at this, and this makes a decision for them on what they're investing in, what they're pulling out of. This could be good or bad for cryptocurrencies. Most normal people don't take a look at this. So I would suggest to you that we're probably going to see a little bit of instability leading up to September 14th, with some possibilities to buy more crypto. However, after September 14th, and with all of this behind us, I think that we're going to see some really good days going into the fall and into the winter. This is my thoughts. So the way that I'm approaching it moving forward is using from now to the 14th as buying opportunities if I can. I already utilized yesterday to do a little bit of that. Now I'm watching and waiting. I'm seeing a little bit of a recovery, but if we see some major pull downs, depending on which coins they are, I might decide to put in just a little bit more and hedge my bet on the fact that I think after the 14th Consumer Index report, that things are going to get really healthy really quickly again. This may or may not be what you want to do. You need to gather the information for yourself. I am just here to share with you what I'm doing and what I'm seeing out there. But overall today, everything seems fine. We're not seeing the furtherance of the plunge. That doesn't mean that something can't happen. There are some scenarios out there suggesting that Bitcoin could go down as much as to 43,000. If Bitcoin does go down to 43,000, that is going to impact the rest of the cryptocurrency market, including cryptos like Dogecoin, Ethereum. Bitcoin goes down to 43,000. Expect to see that Dogecoin could go down to around 20 to 21 cents. It's a possibility. That's only a scenario. And even if that scenario plays out, that scenario just means to me from now until the 14th or 15th that these are the buying opportunities. And then it's going to all come back. Generally, the only people that lose out in the cryptocurrency market are those who panic sell when the market is crashing. Those are the individuals that feel like I've just got to take out what I can. And then what ends up happening is you see the market recover. And if you just would have held strong, you would have been fine. And we've been seeing that over time, right? So for example, if I go to the 3 month, actually, let me go to the year now. We saw this major crash down. the individuals who sold down at this bottom area right now and never got back in did not see this recovery. And now we're seeing it crash again. But we know that at some point, the crypto market is going to recover again. There is solid development behind cryptocurrency, and there is practical application and use that many millions, if not hundreds of millions, and eventually billions of people are going to be using, including the adoption by many countries. So we know that we're still at a starting point, and we know that this is a long-term deal. If you are a long-term investor, you are going to be fine. You just need to choose what you're going to do in the moments. Are you going to hold? Are you going to use it as a time to buy? With knowledge and information comes power, so you can decide what you're going to do from now until that consumer index report, and then you can decide what you're going to do afterwards. And listen to many different people out there. Take some information from me, take some information from some other YouTubers out there, and you make the decision on how you're going to proceed. So that is the best that I can give you for today. You guys are great, as always. I will catch you next time.